Well, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is T3 Live's Director of Education, Sami Abusaad. And thanks so much for joining me today, Sami.
I'm glad to be here.
All right, so you're a new guest here on this program. So first, I want you to just introduce yourself for the audience. Tell me how you got into trading, how long you've been trading, how you found T3, what your role is with T3, kind of the Cliff Notes version of who you are as a trader.
All right. So yeah, I'm Director of Education at T3. I got involved, I think in either 2004 or 2005, when at the time I had saved up $20,000, and I didn't know what to do with it. I read about Warren Buffett, and I found out that the second richest man in the world at the time had made all his money from the stock market. So I wanted to learn about the stock market, and that's how I got involved, basically.
And when was that again?
I'm sorry, what?
When was that again?
I think that was either in 2004 or 2005, and I went full time in April of 2007.
Okay. And so you got that interest in stock trading and you started on your own, I would assume, correct? Just trading on
I
your own at home?
Yeah, I live in the Bay Area, so I started buying basically tech stocks, and it was a bullish market. Market went up. I made money. I had $20,000. I put 16 of it in an Ameritrade account, and in less than 6 months, I had made 10,000 out of the 16. And then by the end of the year, my account was up almost at 50,000, like 49,700 or something like this. So I was absolutely amazed at the results. And my older brother, who's a PhD and he's the brainiac in the family, was also really impressed and thought, if you can do this through buy and hold, which is what I was doing, imagine how much more you could make if you trade the stocks that actually move a lot. So, and he was referring to the stocks on the most active list, the top gainers, top losers. And so, that's when I got into day trading also, not just swing trading.
Okay. So you started off trading on your own, and then from there, kind of what was the projection of your career?
Yeah, so I started off trading on my own, and then like I said, my older brother encouraged me to pursue it, and I did. And that's when I started losing money and realized that I didn't really know as much as I thought I did. The market was bullish and I was buying and it worked. But now that I'm day trading and the market wasn't bullish anymore, I was losing money. So I had given back everything that I made plus $15,000 more. So that's when I realized, okay, well, I got lucky probably. Being an accountant, I was an accountant, senior auditor for KPMG, which is a Big Four accounting firm, was of no help at all. So I decided to seek help, and I joined the financial website it's called Zax.com, similar to Yahoo Finance.com. And they were running a contest, a competition, and whoever won the contest got $100,000. It wasn't real money, but whoever won by the end of the year got $100,000. I didn't do well at all, but I got to correspond with the leader out of hundreds and hundreds of people, because he posted a blog. He made a blog post about the passing of his father, and I just reached out with a heartfelt message. And he responded, to my amazement, and told me that he learned it all. He learned it all from a small company called Pristine, and he encouraged me to take their classes. So of course, right away I did, and Pristine ended up getting bought by T3 Live, and that's how I ended up with T3 Live, basically. And that happened. T3 Live, I think, acquired Pristine in 2015, so 8 years ago.
Wow. All right. So just a reminder for everyone who's here with us live, this is, a Q&A session between myself and Sami, but also a Q&A session between the audience and Sami. So I have put a comment in the live chat where just to show everyone where it's at, please submit your questions for Sami there. And then in the second half of this event, I'll make sure to ask him all of those and get them all answered. So go ahead and let those start piling up as they come up in your mind. Okay, Sami, so you mentioned Pristine trading, and I know you are an expert in the Pristine trading method. It's one of the things that you teach at T3 Live. So tell me what that is for those who don't know and how you learned it.
Yeah, so the Pristine method of trading is basically an objective way to analyze and read price action. It's not a system. It doesn't say, it would never tell you, okay, if the stock crosses over the moving average or exceeds $100, then it's always a buy. No, it teaches us an objective way to analyze price action across multiple time frames. And then it teaches you also several high probability patterns to look for, to take advantage of whatever you're reading or seeing on the charts. So that's what the Pristine method is, really.
Okay. So describe your personal trading style and how you've developed your own strategy over time.
Yeah, so it's a long story. I listened to one of the talks given by Jack Schwager, who wrote Market Wizards, and he said that and for those that don't know the backstory, basically Jack Schwager was a struggling trader. He set out to interview the world's best traders, thinking that they all did the same thing. That's what he thought, and he realized that not two traded alike. Every single trader he interviewed traded differently, but they all traded in a way that suited their own natural personality. So he said, you have to find a way, you have to trade in a way that suits who you are as a person. And so I was like, gosh, so how do I figure out what suits me as a person? So I broke the day down into several like phases. I thought, if I trade the open, just the first 30 minutes or so, there are no trends, there aren't that many patterns yet. So I have to be trading something I have to trade things that are moving off of news. And that's when I decided, it means I have to trade gapping stocks. And I figured out, so I created a strategy for trading gaps, and I figured out different entry patterns to trade gaps at the open, because there are no trends, there aren't that many patterns really. You can't do much multiple time frame analysis, because the first opening ticks, there's nothing you can analyze, not much. So that's the gap strategy, and I decided, okay, well, after the open, what else is there? What else can I trade? And I realized that, well, there's strong stocks, there's weak stocks. I want to buy the strong stocks and short the weak stocks, and that's how I created my relative strength, relative weakness strategy relative to the market, obviously. And then there's one other. I said, is there anything else? So at the open, I trade gaps. In the later part of the day, or late morning, rest of the day, I can focus on stocks that are showing extreme relative strength to the market, extreme relative weakness to the market. Is there anything else that I can do? And I decided, yes, there is. There are stocks that go absolutely parabolic during the day, and I can fade those. I can go against them, and so my climactic buy, climactic sell setup strategy was born. So I figured out how to trade the day in a way that makes perfect sense to me. But I also, because I live on the West Coast, I also, so the market closes at 1 o'clock, and I have a lot of time still left in the day. When I was starting out, I would look at charts continuously, like 2,000 a day or so. And so my eyes got really trained at spotting patterns quickly, and I didn't know it at the time. But I was mostly reviewing swing trade, daily charts for swing trading. And so I'm an active swing trader, I'm an active day trader, and I've developed other strategies for trading long-term trades, for trading earnings. So I trade earnings. I send out an alert to subscribers every day, telling them what companies are reporting that I'm actually going to be buying or selling. And so I've developed some strategies over time, but I've been trading full time for 15 years. So it takes time to really develop strategy. You don't just you don't just wake up and say, okay, this is it, and you discover it. It takes time. But the most important thing, I think, is to trade in a way that really makes sense to you, that you totally love, you agree with, and not just jump around too much. And once I've developed my strategies, I never really looked at anybody else's strategy. Why would I care? I mean, I know what I do, what I want to do, and I just stick with it.
All right, so let's get into, the nitty gritty. This event is kind of for like the nerdy traders who want to know exactly what you're doing. So talk first about your gap strategy and, what that is.
Yeah. So with gapping stocks, this is the key, is that stocks that gap overnight because of news basically have given no trader the chance to enter or exit their positions. So, you wake up, you have $100,000 in this stock. Some people have millions. Some people have less than 100. Let's say you have $100,000 in this stock, and it was looking fine and everything was looking good, and you wake up and it's down 20%. What do you do? So gaps trap people. And so if you can read the chart objectively and can tell, wait a second, based on what I'm seeing here, a lot of people are on the wrong side of the trade. So this stock should drop after the open. So guess what? Now your job would be just to find an entry, find a way in it. And the same with gap ups. The stock might have been breaking down really weak because maybe people were expecting bad news, bad earnings, whatever it was. Maybe the market was breaking down, people shorted it, stayed short in it. And how do you know they stayed short? Because you don't see a bottoming tail on the candle. So if it closes at the lows, it means everybody that shorted stayed short. And so when the next day, if it gaps up, every single person that shorted it, including small money, big money, dumb money, smart money, every single person is now underwater. They're going to cover. Their covering is going to push the stock price higher. So you take advantage by getting in it long. So it becomes. So reading gaps is really easy, but it's a powerful methodology, a powerful way to make money, because gapping stocks move a lot. I did a webinar one time and I titled it, what did I title it? Basically, 5-day moves in 30 minutes or less. So you get a 5-day move in 30 minutes or less. And so your job becomes, once you're able to read the gap, your job becomes a matter of execution. Can I figure out a way in it with minimal risk, basically? So that's my gap strategy.
What is the average time frame that you're in one of those gapping stocks on a day trade basis?
Probably on average 30 minutes. I was in a gap today that I was in basically the whole day. AKTS, Alpha Kilo Thomas Sam, AKTS was in it the whole day almost. But most of the time, I would say probably 30 minutes. Sometimes I'm in for 10 minutes, 5 minutes, and sometimes like today, I could be in a stock for several hours.
All right. And then, so you have your gap strategy that you use at the open. And then you said throughout the rest of the day, you're using your relative strength, relative weakness strategy, correct?
Right.
So explain
correct.
what that is.
Yeah. So let's say you see a stock, the market is bullish. So the relative strength, relative weakness strategy, you're trying to play long in a bullish market. A lot of people make the mistake of strong stocks, but the market is weak. That's not what we're trying to do. We're trying to buy stocks in a strong market, but the stock is showing something really special about it. It's extreme relative strength. It's, the market is just coming off the lows and your stock is basing it at the absolute high of the day. Guess what? That's probably poised for a breakout. So I look for things that are unique, that are on their own page, or stocks that are showing extreme relative strength to the market, so that when the market turns up or down, I can take advantage. Basically, I can time my trade with the market and take advantage. And so that's what the relative strength, relative weakness strategy is. And I use a couple of entries for it, either a breakout entry or a pullback type entry. Mostly, it's either stocks correct through time by going sideways, or through price by pulling back. So I have a couple of different entries for it, but I mostly play it off the 15-minute chart and either on base breakouts or pullbacks.
Okay. And then what was the third strategy that you said you used?
It's a reversal strategy.
All right, talk about that.
It's a climactic buy setup, climactic sell setup strategy. So a lot of times, this is what I used to do when I was starting out, is I would look at a stock and say, my gosh, this stock is down 30-40% on the day. It can't go any lower, and then it would drop another 50%. And so you don't want to be buying weak stocks because they're down too much on the day. You don't know what down too much means. But what if you're looking at a stock and you see that it's going at 100 miles an hour, but then it starts to cascade, it starts to capitulate, and now it's in free fall. It's like a waterfall, literally, like it's down, it's dropping really hard, but now it's in water. It's a waterfall. That means people are panicking out of the stock. That means that when there's blood on the streets, look to buy stocks. That's what that means. When the panic is extreme, you look to play long. So today we did the AYX short. AYX short. So alpha yellow X-ray short, because again, it was up, and then it went vertical. So that's not sustainable. So you look to fade that move. But you need to look for an entry. You can't just jump in without an entry. So in trading, there's the concept, the theory, and there's also the execution. A lot of people learn the concept, but they don't know how to execute. So the execution is like super important, just as important, but it's also more difficult,
right?
Because you have to be precise, you have to control your emotions. So that's my third strategy is buying weakness, shorting strength, but only at extreme levels when the stock capitulates, basically.
All right. So you said you live on the West Coast. So for you, the market closes at 1 p.m. I also am on the West Coast, so same kind of thing. We're both kind of early morning people, done early in the afternoon. But you said you're looking at charts, kind of all day after the market closes. And are you, during that time, kind of looking at stocks to hopefully play the next day?
I am mostly looking for swing setups. Okay. I have a newsletter that I send out every day, and I'm looking for basically plays to take long or short to hold over the next several days. So most of my day trading or my day trades come off of the gaps list. I prepare a gaps list in the pre-market, list of stocks that are gapping up or down, and that usually makes up the bulk of my day trades. But the swing trades come from the after hours preparation. And that's what I'm looking for, basically, in the after hours. I'm looking at daily charts, and I'm looking for swing trades, swing and long-term trades.
Okay. So walk me through your personal process when it comes to picking which stocks you want to trade each day.
Okay. So the day trades, I'm looking for gapping stocks, and especially professional gaps or surprise gaps that trap people, that catch people on the wrong side of the trade. So those are the day trades. The swing trades, I'm mostly looking for things that are coming off of a bottom. I mean, I'll play breakouts, I'll play pullbacks, but I'm mostly interested in catching stocks that are in the process of bottoming. Maybe they've dropped from 400 to 50, and now they're in the process of bottoming. Because if you can catch those and keep even just a small portion long term, then you can make a really nice sum of money. So I'm mostly looking for again, stocks coming off of their bottoms, off of large rounding bottoms after a big drop. But I'll play also things that are weak, things that are really stronger than the market. There's several strategies that I developed, but most of my day trades are off of the time frames in the morning, off of the 1 or the 2 minute time frame. The day trades are always off of the daily or the hourly chart.
Okay. And what are your favorite indicators when you're looking at charts?
I only use, so as everybody knows that that's a technician that looks at charts. You start off and you read about different indicators and you say, well, the MACD, the MACD indicator, the RSI indicator, the Bollinger Bands indicator, the stochastics, those all sound sexy. I better start using them. And then you find out one by one that they don't work, or they only work under certain conditions in a very limited way. So I dropped all of that, and I only use a couple of moving averages, basically the 20 period moving average, simple moving average, and the 200 period simple moving average. I also use volume, but that volume is really not an indicator. It's a true depiction of what's happening,
Mm-hmm.
the level of involvement in the stock. So
Mm-hmm.
volume and the the 20 and the 200 period moving averages, and that's it. I don't use anything else. I don't use market internals. I don't use any other indicators. I tried them all. That's why.
Yeah,
They don't
yeah.
work.
I hear that from, most of the traders I have on this program. Most of them use one or two really simple moving averages, and that's what they found has worked for them. So,
Yep.
right in line there. All right, so this is a question I ask every trader who I have on here. We're halfway through, well, yes, we are halfway through the week. It's a shorter, holiday shortened week of just 4 trading days. So how would you grade your week of trading so far on your typical grading scale, an A to an F, and why?
An A to an F, you said?
Yeah, just like, if you were grading a paper at school.
I would say, it's pretty good. Nothing amazing, nothing bad. I would say like a B plus, maybe something like that. I mean, I don't think I made any major mistakes. So
Mm-hmm.
the week is going fine. We've only had 2 days so far this week.
Mm-hmm. Yeah. Okay. So on that, we are 3 trading days into September at this point, Friday, Tuesday, Wednesday. This is historically the worst month of the year for stocks. So what are the key levels that you're currently monitoring in the market? I know you prepared some charts for this, so just let me know which one you want me to pull up first, and we'll go through those.
Yeah. So if we were to look at the SPY, which is the tracking ETF for the S&P 500, the SPX index,
Yep,
you will see that, you'll see that on the weekly time frame, there's a pivot. There's a, we've had a pullback, and then the SPY went back up. So that's the line in the sand. If we break under it, then that will be really, really bearish. And I think the price is 4, what was it? I don't even
It looks
remember. I
like
think I wrote it. Yeah, 433.
right around 430
433.
something.
Yeah. So so that's 433 on the SPY ETF. So on the SPX, it would be 4330, $4,330. So that's kind of the line in the sand. On the Qs, which is the tracking ETF for the Nasdaq 100, the top 100 companies in the Nasdaq, it
I've
is,
pulled that
I
chart
think,
up too.
yeah, I think it's 354.70 is that pivot. So we should not break under those pivots on the SPY or the Qs. If we do, then really, really bearish. But barring a break, I mean, the bias has got to be bullish, because we're bullish. We're in an uptrend on every time frame. Because we moved up a lot and then came in good. So we were moving up a lot, came in hard, moved up now recently a lot. So now I'm expecting a period of like back and forth, maybe some consolidation before we continue to move up later on. I'm aware, I'm cognizant of the fact that the Qs is up like 40% on the year, some crazy number like that. So how much more can it go? I don't know, but I'm a trend follower. I'm going with the trend. The trend is up. I'm going to be bullish. In the short time frame, it's going to be probably sideways, maybe a little bit bearish like today. The market sold off. But I am just sticking with my long-term bullish bias, barring a break of those pivots those levels that I mentioned. So as long as above them, I'm basically going to be bullish.
All right. So on that note, how would you describe the current market sentiment and action? Bullish for sentiment, I would guess, right?
Yeah, overall bullish, but I mean, neutral to me, maybe even slightly bearish in the short term, but overall longer term bullish. What was the other part of the question?
The action that you're seeing.
Oh, the action sideways. I would say mostly sideways, up a lot, down a lot, but overall sideways at the moment.
When the market's in those kind of sideways movements, like we saw earlier this spring, it kind of seems like we're getting back into that same kind of period. Is it harder for you to find stocks to day trade or swing trade when you're not seeing much of a trend up or down?
It's never hard for me to find the place. I have like a million ideas every day, but
Okay.
it is harder to get follow through. So
Yeah.
so yes, so it's not harder to find plays and ideas. I have so many ideas all the time,
Mm.
swing and day trades, but it is harder to get much traction, much follow through.
Hmm. Do you change your strategy, sorry, at all during those times where it's harder to get the follow through, or you kind of just, sit on your hands and let the market, get back to where you can get the follow through?
Right, you just become a lot more choosy. You become
Hmm.
more picky. You take it easy. But I don't change my strategies really.
Okay. What stocks specifically are you bullish on right now, and why?
Um, so there's so many, but
Hmm.
off the top of my mind, so my number one stock is Tesla, but I'm
Okay.
in it from the bottom, and I've added several times. I have over 1.2, $1.3 million in Tesla, so it's by far my largest position.
Mm-hmm.
Um, and that's actual money, not like buying power. It's actual money that I have in Tesla, so it's by far my biggest position, and
Hmm.
so I'm very bullish on it still. But in terms of in terms of like, and a lot of stocks have moved up so much already, so it's hard to like uh, tell you what stocks I'm bullish on, because a lot of them are gone already. They're very, very
Hmm.
bullish, but they're already gone. But in general, I'm now turning bullish on the stocks that haven't really participated with the market's rally. So, for example, we're using Zoom for this call.
Mm-hmm.
Zoom I think, is one of those stocks that I'm in it already,
Okay.
that I'm bullish on. Roku hasn't really participated. Twilio
Hmm.
hasn't so I'm turning bullish on those. Maybe Zillow. I'm also bullish on some of the China stocks, but some of them are already long gone, like the
Hmm.
PDD, Tiger, TIGR, Furu. What else? So Baba, I think, is in the process of bottoming. BABA, in the
Hmm.
process of bottoming. So I like some of the China stocks. There are some gold stocks that I also like. I think HMY is pretty good. I like it a lot. Maybe KGC, but I think KGC is not quite ready. I don't know. There's lots and lots of names, but just off the top of my mind, those are just a few that come to mind, basically.
All right. And before we get to audience questions, on the flip side of that, what stocks are you feeling more bearish about at this time?
I don't have anything that I like long-term short, because I
Hmm.
feel like I have a few, maybe I have 6 open positions that are short right now. So
Hmm.
there are some positions that I have short, like the BTAI. I have that short, but it's a biotech, I think. But in general, I'm bearish on. I always turn bearish if the chart also supports my thesis on stocks that
Hmm.
get involved in politics. So like Target, Disney,
Mm.
maybe Starbucks, and so those are not. They don't look good on the chart, and they're also involved in controversial stuff. So those to me look lower. Consumer
Mm.
defensive in general looks lower. Food and beverage stocks in general looks lower. Look lower. Um, what else? I have a few individual stocks that I'm in. Some of them are already too late, but I don't have. I can't think of anything that I would say this is a long term short, like I can with some of the bullish stocks that I mentioned earlier.
All right. So let's go to some audience questions. Our first one comes from Ryan, and he asked, Sammy, is it possible to be too objective? That is entirely chart based. How do you include other factors in your trading, or do you just ignore them?
This is a very good question. I suspect that the question, I suspect there's depth to that question. I can say, oh no, it's not entirely possible to be too objective and move on. But I'm gonna say I agree that it is probably possible to be too objective. And what probably Ryan means here is, okay, so you read the price action, but
Mm-hmm.
what about your personality? Like, do
Mm-hmm.
you? I think that's necessary. It is necessary for you to involve your personality, your critical thinking, your gut instinct into your trading. It's a lot of times, when I say, you really have to be objective, yes, you do in reading the price action, but that doesn't mean, I will read the chart objectively, but I'm going to also use my experience, my instinct, my personality, my aggressiveness sometimes to pursue certain stocks a lot more than I would some other stocks that don't really speak to me, even though the charts may look identical. So in answer to your question, Ryan, I think to some extent it is possible to be too, I wouldn't use the word too objective, but too analytical and lose yourself, so to speak, lose that part of you that will actually make you the money, which is your personality, your own unique personality, your own unique critical thinking.
Great. All right. Jason said, Sami, thanks for all of your information and knowledge on the Pristine trading method. Are there any books you would recommend reading for a new day trader? He's already read Trading in the Zone and Disciplined Trader by Mark Douglas.
Yeah, you're welcome, Jason. I'm glad you're getting started. My favorite book of all time on trading is gotta be Reminiscences of a Stock Operator by Edwin Lefevre. And it is written about the life of Jesse Livermore, the greatest trader at the time, the wealthiest person in the world at the time also. And that book doesn't teach you anything practical. You're not going to read it and wake up the next day and know what to do with it. But there's a lot of insight, a lot of wisdom that you can actually get from it. So that's probably my favorite book of all time. I also like the original Market Wizards book, the original one, not the new Market Wizards. So I think in the same way, it doesn't teach you anything practical, but it's interviews and stories about the world's greatest traders. So it's nice. And I've read a lot of trading books. I mean, maybe like probably well over 100 over the years, but they don't teach you anything really practical. Some of them have great insight and wisdom, like how I made $2 million in the stock market by Nicholas Darvas, I think is his name. That was pretty great. But most of the time, again, it's just, it's mostly for entertainment. You're not going to benefit that much. So I wouldn't spend too much time reading books. I would actually get in the din of battle, like go for it. Of course, I'm not encouraging you to risk mortgage the house here. I'm encouraging you to actually take action, do it with paper money initially, or do it with one share per trade or something like this. But you have to get moving and forget about books in general. But yes, if I were to recommend one other book, it would be probably Reminiscences of a Stock Operator.
Okay. Next question comes from Masla. I hope I am pronouncing that correctly. He said, let's take Sami back a bit. During the time that you were down 15K, what was your mindset and what was your process to get yourself out of that hole?
It's very, and that 15K, that was like how many years ago? That was probably 18 years ago or something like this. So that was a long time ago. And that was a lot of money back then, but also for me. It was personally, it was a lot of money. So it's very deflating. It's very, your self-esteem goes way down when that happens. So, but you have to you have to have the passion and energy to keep going, to pursue it. You cannot give up. If you give up, you're never going to achieve anything great. Basically, if you give up that easily, you just have to pick yourself up and then, and just tell yourself, I'm not quitting until I figure it out, basically. So that's the kind of persistence that I think it puts you above most other people. It's not the intelligence. It's not how smart you are. It's, do you have a dog in you? Do you have that persistence? And so, you just have to encourage yourself, do what you need to do, but you have to basically get back up and try again. Try smarter. Try harder, but also try smarter, I would say. Figure out what you did wrong and see if you can avoid repeating the same mistakes. And if you can identify the mistakes and eliminate them, and you eliminate one mistake a week, well, I mean, my gosh, in just a few months, you'll have eliminated 70-80% of all the mistakes that you can make.
Right.
So you just have to, identify what worked for you, what didn't work, and then get rid of what didn't work, and then focus on what works, and then maybe discover new ways to do the same thing that you were trying to do before.
Adding to that, what would you say personally for yourself were the biggest lessons you learned from that period in your career?
Biggest lessons is, I think, I speak, I might come across as, oh, this guy is cocky or overconfident. I'm not at all. I speak from experience. So in the beginning, I get people in my room, in my trading room, in the chat room, or whatever, or I hear from people via email all the time, and they think because they have had success in their other career or profession that they are smarter than everybody else. I think one of the biggest things that I learned is back when I lost the money, when I lost everything I made plus $15,000 more, is that I really don't know as much as I thought I did. So it's a very humbling thing, but it also makes you realize that you don't know yet. So because if you think you know, you will stop the search. You won't really look for information or try to learn new lessons. But if you come to the realization that I don't actually know as much as I thought I did, I just got lucky. If you're humble enough to face yourself and say that to yourself, then that's when new learning begins. So that's what I was humble enough to say, oh, I'm an accountant and I can read financial statements professionally, because I was educated. I was a professional accountant basically. I could read 10Ks and 10Qs in my sleep, and yet that was of no help to me. And I was humble enough to say, oh, that stuff doesn't work, and I don't know as much as I thought I did, and I started over. So just keep that. That's really important. I think is when you're starting out, to be humble and to be receptive, open-minded, and not think that because you're a doctor, you're a superstar in this other field, that's going to translate into success in this field. It won't. Most of the time, the people that come, the students that come to me from very successful backgrounds make for very bad traders. Most of the time, not always. Most of the time. I was teaching one time a mentorship program where people would come from all over the world, actually, not just the country, and trade with me for a week in person. And I was in New York, and I had a doctor, I mean, a real MD that had his own clinic with 15 staff working for him, and then a truck driver who probably, in all likelihood, didn't finish high school. And the doctor, and he was a truck driver. And the truck driver was actually a much better trader than the doctor. And it was very eye-opening for me. But also, I think it was very humbling experience for the doctor who was struggling, whereas the truck driver was actually doing well and having fun that week. So,
wow. Yeah. Next question comes from Eddie. He said, hi, Sami. Curious if you ever use Algo to help you scan tickers pre-market based on the criteria and defined strategy that you mentioned.
No, I don't use Algos for that. I do use an algo, though, to manage my earnings plays. So I get into stocks the day before the company reports earnings, and the next day they're really wild, and I'm moderating I'm on the mic, I'm day trading. I don't have time to manage them. So I do use an algorithm to manage some of my positions, some of my earnings plays, but I don't use an algo to help me scan. I did create, or I had somebody create a scanner for me to find the setups that I'm looking for, and it just doesn't work because it will find one good one and 50 bad ones, and you end up wasting your time going through the list. So I find that scanners they work for certain things. Like you can use a scanner for finding gaps, or for finding, let's say, stocks that are at the all-time high or all-time low, if that's what you wanted. But it's not advisable. I don't think it's a good idea to use a scanner or an algorithm to find the patterns that you're looking for, because it's not, unless you're willing to spend $2 billion trying to to make the scanner a really smart scanner that can look at multiple time frames and can look at various things. You know, it's very hard to program a scanner to do that. So most of the time, it's very linear programming, and you just, you know, and it might find one setup, one good pattern, and then 50 other bad ones. And in the meantime, I could have found 10 good ones on my own. So that's my take on it.
All right. Our next question is from Vincent. And he asked, do you play earnings? Which, yes, we know you do. But he said, if so, do you use a particular strategy for those? So talk about your earnings strategy.
Yes. Yeah, I do. It's, you know, every strategy is that I use, it's not something that, you know, it's not something that I can just explain or go over in a minute or two, because it's, you know, there's a lot of intricacies to it. There's a lot of thought process that went into creating it, and it's like a baby to me. So, but the earnings strategy, basically, so here's what it is in a nutshell. I look for stocks that are really strong or really weak, but let's just say, you know, let's stick with strong. So I look for really strong stocks that are showing short-term weakness, that are where the traders are currently, the day before the company is reporting, or the couple of days leading up to the earnings report, are selling the stock, because and then I look to buy them, because what that means is, here's a stock that's really, really strong, and it's strong for a reason, probably because it's doing well. But the traders are panicking out of the stock the day or 2 days before the earnings report comes out. So it's a strong stock with low expectations. So it's like giving, you know, it's like saying, here's the Michael Jordan of stocks, and yet people are not bullish. You know, people are not bullish on Michael Jordan. So that gives me an advantage, because now I found a strong stock and low expectations. So it's very easy for the company to exceed expectations if the expectations were low. But sometimes I find a strong stock and the stock is running up a lot into earnings. Well, no, that means that everybody's buying it before earnings because they're expecting the report to be blowout, to be the company to report blowout numbers. So I don't want that, because it's very hard to exceed the expectations when they're really high. So again, I look for strong stocks with low expectations, or weak stocks with high expectations. So the company's selling off really hard. The company, you look at it and it's going to zero. It's like dropping, and yet right before earnings, people are buying it for some reason because they think it's too cheap or something like that. That means it's high expectations on a bad stock. That's probably gonna gap down. So those are the ones that I look to short. Now, there's other things to that strategy, but that's in a nutshell what the strategy is about.
Great. All right. Jason asked, when you first started out, were there any ways, specific setups? Were there any specific setups that you were not reading properly or had trouble recognizing in the market?
Oh, I'm sure. I mean, everything, when you start out, everything you do is wrong. Like every single thing that you do. The way you enter, the way you manage, the way you share size, the way you read the chart, everything is wrong. So that's why it baffles me when people are new to trading, and yet they are like super cocky. They're bragging about things that they mentioned that happen to work, instead of actually being really humble and trying to learn. Because you, like, as a new trader, trust me, you know almost nothing, and whatever you know, whatever you know, is dead wrong anyway, and doesn't work in the market.
Yeah.
So I'm sure there were lots and lots of setups that I misread, or that I didn't, you know, that I thought I knew but were completely wrong. But I don't remember anything off the top of my mind.
Okay. Christian asked if you use tape reading or other order flow tools as part of your day trading.
Yes, and I still do that today. I do use the level 2 window as well as the time and sale, which is the tape, for scalping. So I've done a few videos on YouTube, if you want to look them up, on how to scalp using the level 2 screen. And I've had some amazing days, like over 50K, just scalping the level 2. Now, scalping off of the level 2 doesn't always, I mean, just like every strategy, it comes and goes. Sometimes it's the best strategy to focus on, and sometimes it isn't. So right now, I would say it isn't the best strategy to focus on. But yeah, I use it. I mean, I use it also to get a feel for the stock, to get a feel for the momentum, to see how spready or jumpy the stock is, or how illiquid or very liquid it is, So
Yeah.
so I do use it to this day as well.
All right. For the audience, this is kind of your last call to submit questions. We have a little less than 15 minutes left here in our event. I have some more questions I can ask Sami for you guys, but just go ahead and submit those last batch of questions so we can make sure to get to them before the end. Okay, Sami, so you said that the market you think is kind of in a sideways action currently. So what do you see as being the possible next big catalyst for the market?
That's not an easy question at all, because like, what's the next big catalyst? Is it going to be the Fed saying lowering interest rates? I mean, is it going to be Jay Powell saying we're done raising interest rates? I don't really know what the next big catalyst is. There's always something new that you didn't think about. Maybe Tesla actually figures out full self-driving, autonomous level 5 driving. I don't know really, but probably one of those catalysts has got to be the Fed lowering interest rates, or signaling that they're definitely done raising interest rates, because they've kind of signaled that, but not quite. But yeah, it's not easy, because I think we've had all the catalysts that we were looking for, and so now it's not. I don't know. Not sure what it's going to be for sure.
Yeah, the big sell-off that happened today, the analysts say it was all because of new fears over more Fed rate hikes coming, with most Fed officials, several speaking over the past few days. I think like 6 are on the schedule to speak tomorrow, and they're all kind of still saying we're going to be data dependent. Kind of every meeting is live. We could hike at any meeting, et cetera, et cetera. When it comes to the Fed, kind of what are your personal expectations for these next 3 meetings before the end of the year?
It depends on how the chart is setting up into the Fed meeting. So it depends on what kind of a pattern is emerging ahead of the Fed meeting. A lot of times I can predict, or to a certain degree of certainty, what the market will do after the Fed announcement, but a lot of times I can't. So it just depends on how the charts are looking ahead of the Fed meetings. For now, like I said, I'm sticking with a long-term overall bias, a bullish bias, unless we broke those levels that we talked about earlier. But again, we just we'll wait and see. I don't know when the next Fed meeting is, but we'll wait and see how the chart looks ahead of that meeting or announcement.
2 weeks from today is the next meeting.
So, there you go. There you go.
September 20th. All right. Right. Sami, we talked earlier, we've only had 2 trading days this week. So let's expand this question to over the past week. So kind of Wednesday to Wednesday. Tell me about the best trade you've had and what made it go well.
If you asked me what I had for breakfast, I probably wouldn't be able to tell you. But I mean, I can.
Or just recently, kind of what comes to mind, what might have been a good recent trade.
Yeah, I mean, WBD, which is, I think, Warner
Brothers
is the name of it. Warner Brothers. Sold off really hard. I believe it was on Friday. And then it flipped long. So I played it short, and it worked really well. And the microphone, a lot of people participated. And then on the flip, the first time it tried to go higher, I jumped in and it failed. And I was a little bit mad because I messed up my initial trade on it short. But then the second time it flipped and it really worked. So that probably was my best trade over the last several days. Today, the AKTS worked really, really well also. Unfortunately, I didn't have the size that I had on, like, let's say, the WBD, because it was very hard to get filled on it short. It was on an uptick, but that worked really well too. So those come to mind, the WBD and the AKTS in terms of some of the best trades that I've done.
All right. And then on the flip side of that, Tell me about one of the worst trades you've had and what made it go wrong.
I only remember a couple, and they were both. One was today, one was yesterday, and
Okay.
today's trade was the overstock. I actually probably made like a few $100 on overstock, but the reason why I would consider it to be my worst trade is because I saw a couple of patterns on it and I didn't pursue it. It's one thing to see and so it's another to do to pursue it. And so the overstock had so many OSTK, ticker symbol OST, had so many good patterns today, and I only took advantage of like one of them. No, I took advantage of two of them, and both times I got out too early. And yesterday, I publish a gaps list every morning before the market opens, and I had NVOS, so Nancy, Victor, Oliver, Sam, NVOS as the number one stock on my gaps list, long, and I never traded it, and it kept going up and up and up and up. And the reason why I didn't trade it is because I am biased against penny stocks. I don't like to day trade stocks under $1 most of the time, and it's not my style. For some reason, I just don't like to trade them. And NVOF is like a 30-cent stock, and so I didn't do it, and it just kept going up and up and up and up. So those would probably be my worst two trades. I don't remember last week. I'm sure there were some bad trades still, but those would be, I would say, the overstock, which I actually made money on, and the NVOS from yesterday.
All right. Salah asked or said, "Hi, Sami. What about swing trading advice?" So, what would be your advice for a swing trader? Maybe a newer swing trader.
Yeah. Let's see. So with swing trading, you want to, use the daily time frame as your primary time frame. So you're not looking at the smaller time frames. You're not looking at the monthly necessarily so much. I use the daily time frame, and then I also look at the hourly to make sure the hourly looks like it's ready to go. It's extra confirmation. So I use the daily to find the pattern, and the hourly to confirm that it's ready to go, to confirm that the entry, you're getting in at the right time. So to confirm the timing, let's say. For long-term trading, I use the monthly and the weekly to find the patterns. But for swing trading, I recommend using the daily time frame, and I recommend completely ignoring the stock on the intraday time frames, because if you start looking at it on the small time frames, you'll talk yourself out of the trade. And then the other thing to keep in mind with swing trading is, just like in day trading, there's basically three, but two primary ways stocks correct. They correct either through time by going sideways, or through price by pulling back. So that tells you can only do one of two things. You can only look for base breakouts or pullbacks. And there are variations. There are different ways to, like there's the W pattern. That's a pullback, but with a double bottom. So there's the 1, 2, 3 setup. So you get the igniting bar, the narrow range bar, and the continuation bar. That's a breakout type play. So there are variations, but you're primarily looking for base breakouts or pullbacks to get into your positions. And then just figure out, so those are the two primary patterns I would focus on, and then figure out what your entry is going to be, what your stop is going to be before you get into the trade, and what your target is going to be, because you need to have the reward to risk on the trade to be at least 2 to 1. So when you get into the trade, you already know ahead of time where you're going to get out of it and where you're going to exit if it reaches your target. So there's a lot, this is just like, very general, basic suggestion, advice. But I'm sure if you do some digging online, I've done some YouTube videos on how to swing trade, how I swing trade. And of course, T3 Live website offers courses that I've put together on how to swing trade. So people, sometimes, just like I did in the beginning, we say, I don't want to spend money. I have the whole internet that I can search and find useless stuff to do. But the truth is, it's the internet doesn't put together the information for you in a comprehensive, systematic way like a course or a class would. And I do recommend not being too stingy about spending a little bit of money on education, because you're investing in yourself basically. And you might spend 2-3 years trying to figure it out on your own, when a little class could have, a course that you could have taken, a 2-hour class or whatever, would have explained it in 15 minutes. So so think about the time that it takes to find the information, to figure it out, actually how to apply it, and think about potentially not only the missed profits, but also the losses that you'll have to incur before you actually learn the lesson, which is readily available in a $100 class. So I do recommend in the beginning spending a little bit of money on yourself, trying to get the education. Highly recommend that, whether you buy it from T3 Live website or some other place, whatever methodology you gravitate towards, whatever methodology that makes sense to you, that's what you should pursue, and spend a little bit of money on it. Don't be like me in the beginning, where I said, well, I'll make the money, and then I'll go, I'll make a little bit of money from the stock market, and I'll use that money to pay for the education. Trust me, it's never going to happen. You'll never make money if you don't, unless you get lucky like one or two times, and then you start to think, oh, I got it already, I don't need the education, and then you lose it all in some more. But normally, you're not going to make money from the stock market to be able to pay for your education. No, you get the education, and then hopefully you figure out a way to make money from it, but not the reverse, not the other way around.
All right. Before we wrap things up here, Sami, you've mentioned a couple of times your trading room, your chat room that you run. Sami, for the audience, is the moderator of the Strategic Day Trader virtual trading floor with T3 Live. So tell me, Sami, how running that room has changed your personal trading, or has influenced your
Absolutely. Those are great questions. So basically, when I joined, I was asked in 2010 or 2009, I think 2010, to help out and become a co-moderator, an assistant moderator, basically. And I thought, why would I want to do it? But I've always thought that teaching is my calling, and that's how I used to have 18 tutees, or students that I used to tutor when I was in school, in college. I've always enjoyed teaching. And so I said, what the heck, I'll do it for 6 months. So I actually became a moderator thinking that I was going to do it for 6 months. And then when I became a moderator, I realized that, wait a second, I'm now forced to explain what's in my head in simple ways, in simple terms. And that really helped me to understand things better. So it made me a much better trader. And that's why I enjoy being an educator, because it helps me be better. It helped me become a better trader. And also it's something that I enjoy. I like being a teacher. So I enjoy it. I'm teaching, and I'm trading, and I'm joking around on the microphone, and it's, what else can I ask for? I'm getting the best of both worlds.
Awesome. All right, Sami, thank you so much for joining me for today's event. This was a really great discussion, and I think wonderful questions from the audience. I really enjoyed it. For everyone who's still with us, I'm putting a comment in the chat for our next, with a link for our next event. That'll be next Wednesday at 4:30 p.m. Eastern. JR Romero, who's also another moderator of the virtual trading floor with T3 Live, will be joining me next week. Sami, again, thank you for coming on the program today, and I hope to have you back on in the future. Have a great rest of your night.
Absolutely. Thank you. Bye-bye.